We're here on a Friday afternoon in Baltimore, getting a little loose with Loss and Lease Management. And with that, I give you Chris and Zach.
Thanks very much, Keith, and thank you everyone for joining. Over the next half hour, 40 minutes, we're going to walk you through Loss and Lease Management, show you the business process as it relates to the system, some of the forms and the way that the lease management system works. We'll also go through the regulatory updates and how Lawson is accommodating those, and show you how to run transition reports and also leverage the system to meet those new requirements. A quick bit on RPI. We were founded in 1999. We're located here in Baltimore, Maryland. This is headquarters. We have a location in Tampa, Florida, as well as Kansas City, Missouri. We have consultants all over the country specializing in finance, supply chain, HCM, and we have a big tech practice too.
All right, so what is lease management? It's an integrated solution that's going to automate the way you account for, analyze, and pay your leases. One quick disclaimer is that LM is not intended to be used by the lessee, or it's intended to be used by the lessee, not the lessor. So if you're leasing a building, the module is for you. If you are the one leasing the building to someone else, the LM module doesn't currently accommodate for that. A couple LM requirements. So of course you're always going to need GL, and you definitely need AP. So LM is going to generate invoices, you can approve them, and then you're going to interface them into AP so that they actually get paid. The AP company is required as a very basic setup on the LM record, and it uses a lot of those components such as your process levels, your handling codes.
Handling codes. So every lease needs to have a handling code for expense type. We're not matching here, so it's expense type handling codes that got brought into AP. But you need to make sure the vendor's set up in AP so you can pay them, obviously. And I think that about covers everything from AP.
Yep. And then activities, it's optional. It's definitely not a requirement, but we've seen people utilize activities as well. All right, so some key functionality with lease management. You can define and maintain your leases as well as your right of use assets. You can manage your rent, your lease payments, and any other related recurring costs. They're called non-lease components, formerly referred to as executory costs. These are anything such as CAM, usage fees, insurance, any additional costs related to that lease. It will create and approve lease payment invoices and interface them into AP, or a couple jobs. And it's going to create the GL journal entries for your lease expenses, your liabilities, your interest expense. We'll walk through that in a little bit. So a quick walkthrough through the business process flow. Of course, first you need to set up your lease. It's going to be on LM21. And then we need to add our payment schedule, which is LM31. The payment schedule is going to be used for the invoice creation so that we know when and how much to pay for each lease. For long-term operating and finance leases, which are the new term for capital leases, you do need to set up a right of use asset. And then once everything's released, we can go ahead, we create our invoices. We can review those invoices through, I believe it's a 231 report, or directly on LM31. We can go ahead and update those invoices on LM31. Once we're comfortable with the invoice, we're going to go ahead and approve. Then it's ready to be interfaced over to AP. The invoice is going to get brought into AP in a release status, so it's ready to get picked up and paid. So after the interface, you're going to calculate interest. This is only if you have your finance leases. Otherwise, you don't need to calculate interest. And then your month end, you're going to go ahead and post and then close your period.
This is how it relates to the Lawson programs to pay, right? And to set up the lease and approve and pay. A lot of times it's not the same department doing all this.
Yeah.
Right? It's maybe someone's in charge of creating the invoice or creating the leases, managing the actual lease data, the invoices when they're due, the invoice amounts, things like that. And then depending on how you have things set up, I've seen it go both ways, and I think you have too, where AP might be responsible for managing the leases. Property management group might be responsible for managing the leases. But I think very little times is it actually the same person doing or same group of people doing all
Front
this.
to back, yeah.
So you might have people in charge of setup and maintenance up front, but the approved step here might be the people in charge of the leases or the property management group. So there is, even though it is a very streamlined flow within Lawson, there's other departments involved in this process.
Yeah, definitely. All right, date codes. So date codes are one of the setup pieces. When you're setting up a lease, it is optional, but it can provide a good bit of value for you. We're going to go ahead, we define these date codes. We have one for renewals and one for terminations. Then once we assign that date code, we assign a date to it. So we have 11/1 and 12/1 of previous year. But these date codes will allow you to attach these dates to any lease, and it's any milestone or important date for that lease. It's not going to pop up and just tell you, hey, this lease is expiring, right? You do have to be proactive and run the LM207, which looks like this. We can run for all date codes, a specific date code if we only want to see renewal options in the next 6 months or anything like that. So we can run it with different parameters, but it is going to give us a printed report of everything that we said we wanted to be notified from before.
And we'll typically recommend this be part of the month-end close process, right?
Yep.
Run this, see what's coming up, whether it's a termination, renewal, whatever that is, whatever date code you have out there to report on. Running this every 30 days is typically the best way to do it.
Yeah, it's really easy. It's just one quick report to run and incorporate in your month end. We've also seen people implement IPAs flows so that they do actually get notified for those. But.
Yeah, maybe the flow's going out every day or whatever to look at the date that you actually have on that date code and alert specific people based off of whatever routing requirements that you have. But the Lawson system right now doesn't have that type of functionality built into lease management, but it's definitely something that you can add on to the lease management implementation, and we've seen that a few times before.
Yep. Okay, we have the date code listing. So this is an example of the report. It's going ahead. It has the expiration date code, the definition, the description for the date code, as well as the actual date and the lease assigned to that code. Non-lease components. So again, these used to be called executory cost if you're already using the module. They're not called non-lease components, but they're essentially the same thing. It's any add-on cost in addition to your base rent or principal amount. So again, it would be CAM is our example here. We notice that on our payment schedule, we have payment number. We have 2 lines for payment number 1 and 2 lines for payment number 2. That second line, the executory cost code, is populated with the code we created, CAM. So for that same month in October, we're going to have a $5,000 lease payment and then a $1,000 CAM payment. You can go ahead and you can update these on LM31, so they're not set in stone if any of these cost changes, but it's really nice to have in there. You don't have to pay it out at AP. It makes it harder to miss things, as well as just track it, and your projection reports will be a little bit more accurate because you're going to know what you're planning to pay for the next couple years. All right, the classification test. Another nice feature of the LM module is that it will classify it based off of the information we put on LM21 to tell you how this lease should be classified, and depending on this classification, Lawson will actually treat them differently and create different journal entries. Some of the things, the fields that it uses for the classification test is going to be the ownership flag, whether you're going to accrue towards ownership, if there is a purchase option, the economic life to lease term, the present market value, the remaining life to total life, and whether or not it's a specialized asset. You will be able to get an error, or you'll see yes next to any of these. If there is any yeses, it's automatically a finance lease. Everything else will be operating if it's all no's, and if it's over 12 months for the term, it's going to be a long-term operating, and Lawson will also treat that differently. Another nice piece here is the net present value that it calculates during this lease test. This is really important because when we're creating those right-of-use assets, we need the asset basis to match the net present value to the exact penny, and this is going to calculate it for you.
So the new lease requirements, a lot of people on the webinar here might already be using lease management, and there might be some that are just kind of looking to see what lease management can do. A big push we've seen lately for the implementation of lease management is to meet the new accounting requirements to ensure that long-term operating leases are now properly recorded and hold a liability on your balance sheet. So we've seen a big uptick in projects just based on this new regulation. What we want to do here is talk through the regulation real quick and also how how Infor has accommodated that, the programs and the new fields and patches that they've released over the last, it's been since about December, right, of last year. Mm-hmm. So Infor's been coming out with a whole bunch of patches for about 9 or 10 months to meet these requirements, and we'll demonstrate some of those here. But the new lease requirement, if you're not aware, is basically ASC 842. That's the regulation that specifies the right way to account for short-term, long-term, and finance leases. But a finance lease needs to record a liability for all the payments on your balance sheet. And it must have a right-of-use asset, which is directly integrated with asset management. Yep. So even though you're implementing lease management, for some of these leases, more than likely you're going to need to have some asset management set up too. Yep. To make sure the asset's linked up with your leases and depreciated appropriately. All right, so yeah, let's go to the next slide. There is a transition report, an LM 703, which Infor put out in one of their most recent patches or one of their earlier patches. Basically, the lease accounting standard requires that companies apply modified retrospective transition adjustments for the 2 years before you actually adopt this new lease regulation. And the 703 is Infor's program to help facilitate meeting that reporting requirement. The part of the transition reporting is creating a new GL company, GL10 copy, to book the offsetting entries that the 703 is going to produce into that new company. So there's a little bit of work that needs to go into setting up Lawson in order to give you that type of reporting. But there's patches out there now that provide you reports and instructions on how to do that. So the 703 is one of those new programs.
So if you are using lease management right now, you have capital leases. They're now called finance leases, but Lawson's going to treat those the same way. And your operating leases will be handled the same way as long as the term is 12 months or less. Long-term operating leases is really the new piece to this, and that's what's going to be on your balance sheet now. So we're going to walk through a couple of the entries that are made on, you'll see them on LM31 when you do create your invoice. So the very first thing we'll see here in the middle is the debt obligation for the lease and the asset account. This is only going to appear on the very first time after your adoption date or when your first invoice for that lease, whichever one's first. And it's going to be the net present value, and again, it's the debt obligation and your asset account. You see the $5,000 entry here, and this is your lease expense account, or your lease expense, which pulls from your long-term operating expense account, which is going to be at the bottom here on LM21, the
so
payments
that's just
tab.
a snapshot of your lease. LM21 is where the lease is set up, yep. And then we default all the accounting that goes on behind the scenes at the lease level.
Yeah, so for this, we have the debt or expense account. This is going to hold the lease liability, and the long-term operating expense will have our lease expense. On the asset type, it's going to hold our asset account and the accumulated depreciation account. So that's where it's pulling all of this from.
And the ability to split out that with an allocation code is pretty nice too, because you might have one lease that you need to book rent expense to more than one location, and the allocation code allows for that type of accounting.
We see those used pretty often. All right. And then finally, we have the asset amortization, which is going to reduce the book value of the right-of-use asset and the leased obligation. We notice this is a little bit lower. It's $4,100 about, which is less than our $5,000 expense, and this is because we have a discount rate, and it is taking this into consideration.
All right, what type of reports can we get out of the lease management system? One of the, we have online analysis forms like we do in all the other systems too. LM90 is a big one. to look at a lease, review what's out there, see the invoice number, invoice amount, if there's any CAM associated with the invoice payment. One of the really big ones is the lease projection report, the LM 430, which we've seen basically everywhere we've gone, these being done in Excel worksheets.
Yeah, it's a requirement for a lot of people, and
Yeah.
it can be very cumbersome to try and create that entire report.
Yeah, to build it out, to maintain it. And the LM 431 is the projection report out of Lawson, going off of all your lease data that you have set up on your lease. So on the LM 30 payment schedule, on your LM 21 lease, the LM 431 is going to project out lease payments over the next 1 year, 2 year, 3 year, and then 5.
4 or 5, and then
plus.
everything thereafter. Yep.
I think we have a screenshot of that too.
Yeah.
That one's really helpful. Let's go to that screenshot.
So here's our LM 430, and it's going to be broken down. We can see our lease, and then it has the payment, the interest if it's a finance lease, and any executory costs or non-lease components, if those are applicable.
Broken down first year, second year, third, fourth, fifth, and everything after 5. So it's a nice way to summarize all that, and then we get a different way of looking at the same type of data, just collapsed down, breaking it down by capital, operating.
And give us a total, yep.
So a lot of time spent, if you're doing this in Excel now, it might be a few hours, to out each month, and now it's just a click of the button. Okay, so is the lease management system for you? If you have leases, if it's one lease, if it's a million leases, then it's something at least worth looking into. I've done a project where the lease count was right around 70. You've done a few where it's been a few hundred, right? Mm-hmm. So we've seen smaller, we've seen larger types of implementations here, but the system's really good at producing invoices, right? At managing the lease entry, managing lease payment, and accounting for all this within your Lawson ERP system. So it automates the payments to AP. You don't have to worry about AP missing payments or invoices getting lost and not paid. So there's the control there. And you get all the, the maintenance can now be done within the LM system on the lease itself, which is really nice. It kind of gives you control, right? Before, you would just be receiving invoices for rent and paying them. Now you're the source, you're the originator for the leases, and you have control over that, which it's I guess a little bit of a daunting task at first, because you got to make sure all that data is right, which is a big problem, or a big thing that a challenge that we see during conversions and projects. But once that data is there, it's yours to manage, and you have control over everything.
One of those things, some of the data points you have to get together is if there's scheduled rent increases or decreases. That can be built directly into the payment schedule, and when you create that invoice, it will reflect that new amount. And this is really nice so that you don't have to go and skim through all of your contracts and make sure you're up to date on if it's supposed to increase after the second year or anything like that. So it can be built in. Once you set it up, it's there for you, and you no longer have to go and skim through those contracts.
If you're doing all this work in spreadsheets, get out of Excel, get into Lawson, especially if you already own the system. It's there. Project's not, too big to implement, right? It's a relatively smaller engagement, but getting all your data out of Excel into Lawson's always a good recommendation. And if you do have reporting needs for projections or this transition reporting, even to meet the new accounting regulations, right? This is a really good way to meet those regulations.
Yeah, that's been a big driver on people implementing LM, because these new requirements are making your spreadsheet management a little bit more
tougher, right?
Complicated. Yep.
And not only are you now worrying about AP, but you also have to book a GL entry in addition to whatever you're doing before. So now the lease management system will just automate all of that for you.
And one more quick thing is, if you like to account on a straight line basis, Lawson can easily do that. You flip a flag and you identify a deferred rent account, and then it'll automate that whole process for you as well. You don't have to worry about that. All right, so the road to implementation. Chris hit on this a little bit before, but accuracy of your current lease data is very important. You're only going to get out of Lawson what you put into it. So you want to make sure you review all your data, make sure it's correct, and that's it really is the hardest part. It's the biggest time consumer, especially if you have a couple hundred leases that are spread apart and different departments and different locations manage them. It's hard to get all that data together. But once it is together, it's a lot more streamlined and efficient.
Yeah.
We typically see a project to be roughly 3 months. That can be shorter, it can be longer. It really depends on how much time you have, how many leases you have, and how much time you have to give to this specific project. And we know everyone has other responsibilities in implementing LM. So, but 3 months is usually about average. And then another thing you have to consider is that if AP has been making all of your payments for you for your leases, how do we get them to stop making those payments? Because if we're creating the invoices and interfacing them into AP, we don't want AP to just get an invoice in the mail, key it in, and pay that as well, and start double paying all of our leases.
Right. So ways that we try and solutions for that challenge is it really depends on what the client owns. Right. If you do own like APIA or some other workflow invoice routing system, and all invoices are coming there, we can update logic in that current routing to say, if this is a lease vendor, don't pay. We're going to make all payments through lease management. So there's easier ways to do this. But if if the AP department is just receiving invoices all the time, and there's no electronic workflow or things like that, then it's more of a manual control point. Or reports are things that you need to insert into your process to control for that type of duplicate payment potential. But that's something we would talk through during implementation, figure out the best way to solve for with you guys.
Yeah, there's different solutions for everybody, and some work better for others. All right, I think that's all we had today. Are there any questions?
Well, first and foremost, I wanna say thank you for the accounting geek out that I was at. I didn't know it was coming. So first question is from earlier in the presentation is, and we talked a little bit about it, but has accounting for the lessor been presented by Infor as an enhancement in development? So we did talk about this isn't a lease management tool in terms of like you're going to have a bunch of leases, but from an accounting perspective, is there anything that we know of on Infor's? I guess I don't even know, right? Because from an expense perspective, they're regulating how you have to expense the lease over time, right? And how you have to recognize the liability. If you're the person doing the leasing, then isn't it just revenue, or are there special accounting rules there too?
I don't think there's anything on the flip side of that.
Yeah, I don't think there is. And I think we've seen people use the billing module for when they are the lessor, but the LM module is not intended to be used for those situations. So.
Okay. So nothing on the roadmap. During the process of entering the operating leases, when should I input the adoption date in LM 99.1?
So you can set up your adoption date at any point. It's going to be for each company if you have multiple companies. But you can set that up at any time, and that adoption date is going to tell Lawson when to switch over and start accounting with the new ASC 842 standards.
So for a lot of our projects, it's January.
January 1st, I believe, for a lot of companies. Some don't have to implement that until 2020. But you can go ahead and keep operating the exact same way you have until your adoption date, and that's going to actually flip it over. And again, the 703, the transition report, is really helpful. One of the report options is the missing assets, because those long-term operating leases, they do need right-of-use assets now. So it'll actually give you a report of all of those leases that need that asset, so you can go ahead and make sure they're added and in there, ready for when you do start accounting for the new standards.
What does LM look like in V11?
It's a good question.
That's a good question. We are working on a V11 LM implementation right now. It has a lot of the similar features, but if you tuned into our earlier webinar, you'll see that it has a lot of the tabs at the top, so we can see released, unreleased leases, disposed, easily get to those assets, and see a lot more information at once in the same form. But the functionality is overall pretty similar.
If we are new to LM, do we have to set up the LM99?
It does require an LM99 for all companies, even if it's brand new. moving forward, especially if you're implementing after January, with it being this late in the year, you probably would if you haven't started yet. It will require you, for every company that has a lease, to have that LM99 date.
And you would, depending on how new you are, you might need to go back and install some patches. Right? If you've just had lease management but not been updating it with the patches, maybe there's nothing in the system right now, but you're looking to implement. You might not have all the patches needed to do this to meet these regulations. But it's as simple as just installing them. We have lists of patches if anyone needs them, and we can always supply them. But yeah, those need to be in there before we can start doing a lot of the stuff we were talking about here.
Okay. Whenever it starts with, we were told by a Lawson consultant that we do not need to create a new company for the transition to adopt the ASC 842. What do you gain from creating a new company?
The new company is going to provide the offsetting entries for all the transition reporting that the 703 produces. I can't really speak to what his or her recommendations were and what influenced those, but we've typically always used the 703. That's what Infor put out as the way to do this. So those are the ways that we follow what they're saying, because it's our first time doing it too. So we're counting on Infor to provide us the steps to perform, and we're doing them. And if there's another way to do it,
Yeah, please tell us. Yeah.